When the Dow plunged below 25,000 today, it wiped out all of this year's gains. The bad news on Wall Street started with good news on Main Street. A strong January labor report last week showing 200,000 jobs added, the unemployment rate staying at a 17-year low, and hourly wages jumping nearly 3%.
We know unemployment is low. We know more jobs are being created. We know wages are going up. So what that means is that the Federal Reserve may start to raise interest rates, and that is going to take money out of the stock market.
Investors worry a strong economy means rising inflation and questions on how much the new Fed chairman, Jerome Powell, will raise interest rates. His predecessor, Janet Yellen, warned about the rising price of stocks just yesterday.
But it is a source of some concern that asset valuations are so high.
Today's sell-off was the biggest point drop ever, but the percentage decline of 4.6% is far from record-breaking.
These are probably the biggest one-day declines that we've seen in about a decade.
In President Trump's first year in office, the Dow soared nearly 30%.
Everybody thought the market was going to keep going up. It was never going to go down. And so days like this catch people off guard.
Financial analysts say don't panic.
For the long-term investor, you would welcome opportunities like this because this correction shakes the trees a little bit, brings prices back down, makes stocks, more reasonable levels to invest in.
To get a sense of what might happen tomorrow, investors will be looking at what happens in European and Asian markets overnight. Those markets have already sold off this week, and if they continue, we may need to brace ourselves for a rocky week ahead.
Hey, NBC News fans, thanks for checking out our YouTube channel. Subscribe by clicking on that button down here, and click on any of the videos over here to watch the latest interviews, show highlights, and digital exclusives. Thanks for watching.